Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. But before I discuss the agenda, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, the first point of the agenda is the S&P 500 technical analysis on the weekly chart. On the weekly chart, there is some improvement. S&P 500 has come out of the overbought and the saturated. These are two conditions. But the S&P 500 is still heavily bullish on the weekly chart, and in the similar manner, Dow Jones is also seen heavily bullish on the weekly chart. So that is why we cannot say that the trend has changed. No, the trend has not yet changed, as I mentioned in the last week also, in my previous S&P 500 weekly technical analysis, that the trend is still bullish. The long-term trend is still bullish. This is just the short-term correction. The trend will change only when some of the conditions are fulfilled, which again I will disclose in this S&P 500 weekly technical analysis. So weekly chart means the long-term picture. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Again, there is a heavy fall, heavy bearish candles, everything looks bearish, but still on the daily chart, it is not yet bearish. We will say that either it is 50-50, or it is just 60% bearish, just 60% bearish. And in case of the Dow Jones, it is much more bullish as compared to this S&P 500. S&P 500 is 60-65% bearish, whereas on the daily chart, the Dow Jones is 60 or 70% bullish. The third point of the agenda is the probable movement of the S&P 500 from July 29th, which is Monday, to August 2nd, that will be Friday. So probable movement means what is going to happen in the S&P 500, why that is going to happen, and how that is going to happen. So I will discuss everything. So just like last week, we knew that 5497. 5497 was the 23.6% of the fib level. As long as S&P 500 is trading above 5497, it is good, and it can give a bullish retrace to the zone itself. But irrespective of anything, S&P 500 will show reluctance, will show struggle, means it will struggle at the zone no matter what. If it fails at the zone, in that case it will come down, and exactly that was something that has happened on Tuesday. There was a bearish slip, it failed at the zone, and then we have seen a heavy fall. If there would not have been a bearish slip, and also if the S&P 500 would have closed above the zone, then there would have been a very limited fall of 0.2%, 0.5% maximum, 0.4%, even after the bad or neutral earnings of the Google and Tesla. But because of these two technical conditions, there was a very heavy fall, more than 2%. So I will discuss everything here. And guys, once again, when I say the probable movement, I discuss the probable movement in the first part, in the second part also, because I emphasize on the candles, the kind of candles are there, engulfing, and considering the previous candles. So that is why I recommend you to watch all of these, the three sections, in order to understand what is going to happen in the next week, why that will happen in the next week, and how that is going to happen in the next week. Now guys, I am going to begin with the first point of the agenda, which is the S&P 500 technical analysis on the weekly chart. Now guys, this is the weekly chart. So weekly chart means weekly candles. One candle means 1 week. So before I discuss the candle, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's discuss the candle. It's a good or heavy bearish candle. But the closing of the candle is way above the low of the candle. And also on the lower level charts, there is no such indication that there will be or there should be a gap down open. That is why a gap up or gap down is not confirmed on Monday. Number two, because of these two candles, these two heavy bearish candles back to back, this is clear that irrespective of anything, there will be the continuation of the bearish movement. However, this does not confirm that S&P 500 will come down heavily and it will fulfill its technical conditions or technical obligation to 5376 and 5310 approx. Okay, this simply indicates that even if the S&P 500 want to move up, then also it will struggle and we will see some good struggle in the S&P 500, means in the bull side. Whereas the bearish side is open, and if the S&P 500 want to come down, then it can come down freely. So that's not a problem. And because we have seen a daily candle, a heavy bullish candle on Friday, so that has further created more room in the bearish side. Okay, otherwise if there would have been a red candle on Friday, then there would be like this oversold condition and this heavily saturated condition, and then the S&P 500 would have been in technical compulsion to give a heavy bullish retrace on Monday. Okay, but now that is not there and there is a good bullish candle. Okay, that is why there is more room in the bearish side. So irrespective of anything, we can see a struggle in the bull side, whereas a normal movement, okay, a normal movement, okay, or a sudden fall or a sudden decline, okay, in the bearish side. Now when we look into this, the candle of the Dow Jones, okay, it's a bullish candle and it's a heavy bullish candle. Why it's a heavy bullish candle? Okay, the tail of the candle is very heavy, right? Means it came down heavily, then there was a very heavy bullish retrace, and then it has formed in this manner. So this simply confirms the continuation of the bullish trend. However, it does not confirm any gap up or gap down open, but simply it confirms the continuation of the bullish movement or the bullish trend. And also it says that unlike S&P 500, Dow Jones has the potential to move up, okay, without much struggle, and even if it want to come down, then also there will be limited fall. Limited fall to what? Limited fall to the trend line. Simple. Now let's look into the technical indicators. So technically what we can see that clear fan out in the moving averages is still bullish, Ichimoku cloud is still bullish, Bollinger Bands is still bullish. Okay, everything is bullish on this weekly chart. Now MACD is at the junction where it is going to give a bearish crossover. Okay, now why this is important? This is important because if you notice the MACD of the Dow Jones, okay, just last week, the MACD of the Dow Jones was bearish and it was at the junction to give a bullish crossover, right? And because of that, we have seen that Dow Jones, it was under heavy pressure, it was coming down, okay, heavily, and then on Friday there was a very heavy bullish retrace which has helped the Dow Jones to give a bullish crossover. Okay, that is why, and this has put the Dow Jones in the bullish side or in the bullish condition. Whereas if in the next week, most likely or highly likely, there will be a bearish crossover, and once that happens, then what will happen? Then looking into the stochastic RSI, which is already bearish. So what we know is that whenever MACD and stochastic RSI, they follow a certain direction, a particular direction, then that direction becomes the direction of the market or the index or the stock. In this case, there will be the bearish direction for the S&P 500, whereas the Dow Jones has now turned bullish. So Dow Jones will be in the bullish side. This means that we can see fall in the S&P 500 but bullish movement in the Dow Jones, or fall in the S&P 500 will be limited and at the same time bullish movement in the Dow Jones will be limited, or the Dow Jones will move up, S&P 500 will also try to move up, but then both of these will struggle. Okay, Either in the next week or in the next to next week, both of these will come down. Or S&P 500 will come down, Dow Jones will also come down, S&P 500 will give heavy bearish fall, okay, or heavy bearish movement, whereas Dow Jones will give limited bearish movement. So this is there in this the exceptional condition, right? Now there is only one case or one scenario wherein we can say that this crossover will not happen in the MACD, and what will that be? On Wednesday, FOMC decision. Before that, on Tuesday, Microsoft will post the earnings. Then on Thursday, Apple will post the earnings. Tuesday, Wednesday, Thursday, heavily, so these days will be heavily volatile. Okay. If everything goes in favor of the Wall Street, means Microsoft earnings, Apple earnings, and also the Feds. Okay, if everything goes in favor of the stock market, Wall Street, then we can expect a very heavy bullish candle, and if there comes a very heavy bullish candle, then this crossover will not happen. In that case, it will form a bullish slip, and this bullish slip will then force the S&P 500 to move up heavily in a manner that within a week, within 1 week, the S&P 500 will be in a position to gain more than 4 or 5%. Means it is around 5,450. So it can gain 200, means it can gain up to 5,700 within a week. So it is there, yes, MACD, okay, for now it is sustaining stochastic RSI, but the good news for the S&P 500 here on the weekly chart is that the S&P 500 is now out of the overbought condition and the saturation. Okay, this means that if Tuesday, Wednesday, Thursday, 3 days, okay, if everything goes in favor of the Wall Street stock market, then and also it is now not in the overbought or the saturation, so 5,700 easily it can gain, not a problem. And also because the Dow Jones is now bullish, okay, or we will say that Dow Jones is now absolute bullish, 100% bullish on the weekly chart. And also Dow Jones is neither overbought nor saturated. This means that Dow Jones has more scope to move up as compared to the S&P 500. Okay, if S&P 500 moves up by 4%, 5%, then Dow Jones can give 6 or 7%, because it is actually absolute bullish, whereas S&P 500 will be seen only how much? Only 80% bullish on the weekly chart. So that is why I am saying the trend has not changed. If you are thinking that because of these 2 weekly bearish candles, okay, the trend has changed, everything is going down, no, the long term trend is still bullish, no doubt it is still bullish. Okay, in the short term there is a short term correction, but even after this a short term correction, there is no change in trend even on this the daily chart. Daily chart is still trading neutral. So this means that even though there is a fall, okay, and this thing for last 2 weeks, we cannot say that if the trend has changed in any manner on the daily or the weekly chart. Now guys, I have one more information to share with you. This is my stock market knowledge transfer program, or the S&P 500 knowledge transfer program. Through this program, I teach the movement strategies, trend analysis, technicals, predictions, support and resistance levels, and much more. The motto of this program is to help you become self-reliant. And also whatever you are going to learn through this program, this will be applicable to any stock, any index, any currency, any commodity or crypto, etc. And also this program is delivered one-on-one basis. And this is my email address whenever you want to participate or if you have any questions. And this is the Google spreadsheet. More details are there in this the Google spreadsheet. And when you open this Google spreadsheet, then you will see that everything in detail is mentioned here, the basics to advanced, in detail, options and trading strategies, options calculator and live options calculations, strategies and the limits, how to deduce the trend even before it happens, support and resistance levels, and much more. And these are the terms and conditions, and these are the snapshots of the recent meetings. So guys, this is my email address. if you have any questions that you want to ask, or whenever you want to participate in this program, then I've given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis, and this is the daily chart. Daily chart means, and here one candle means one day. Now before I discuss the candle, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you are looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's discuss the candle. It's a bullish candle, just a bullish candle. Okay, it will not be seen or considered as a heavy bullish candle. So this bullish candle does not confirm any gap up or gap down open. So what does this the bullish candle actually represents, or what does this the bullish candle actually tells us? This bullish candle says that the S&P 500 is in a condition wherein it can try to move up, but this bullish movement will be limited or is expected to be limited. That's it. Limited to what? Limited to, there is a trend line, so clearly a trend line at first, then the moving averages which are now coming to the trend line. So if there comes a condition that either on Monday or Tuesday, if the S&P 500 gives a limited bullish movement and at the same time these moving averages merges or hits the trend line, then this will be a very heavy, extremely heavy resistance level, resistance zone, and the S&P 500 will be needing something extraordinary. Extraordinary can come through FOMC. Okay, at first it may come through a Microsoft, but I'm not sure if the Microsoft can give that kind of movement or that kind of help. Okay, but definitely FOMC. Okay, Feds have the power to give this extraordinary support. Okay, after Feds it will be Apple. Okay, the next day. Now in case of the Dow Jones, okay, there was this the open equal to low condition. Okay, this open equal to low condition was seen on Friday, and then it moved up and there was more than 1.5% bullish movement. Okay, it's a heavy bullish candle in the open equal to low condition, and yes, this bullish candle indicates either there will be a gap up open, okay, on Monday in the Dow Jones. I'm not saying S&P 500, there may or may not be, but in the Dow Jones either a gap up open on Monday, or irrespective of any open, some bullish movement on Monday, some or more bullish movement on Monday. So gap down, there are chances, but these chances are not much, but bullish movement irrespective of any open, that is there. Okay, in case of the S&P 500 there are absolutely no chances at all for the gap up or the gap down, but here at least there are some chances. Okay, not extremely heavy, but there are some chances of seeing gap up open. Otherwise, irrespective of any open, this is the bullish movement. But the good thing is that when the S&P 500 have seen this kind of bullish movement only because of this the Dow Jones. So if the Dow Jones goes bullish and sustains bullish, in that case definitely S&P 500 can again try this the trend line. Okay, that is there. Now looking into the technical indicators, okay, so definitely there is some change. That now the S&P 500 means there used to be a clear fan out in the moving averages, that is not there, mixed reaction through the moving averages, and also trading S&P 500 is trading and closing below the moving averages. So all of this indicates bearishness through the moving averages. Okay, Bollinger Bands bearish, Ichimoku cloud is still supporting the bullish, and then the MACD is heavily bearish, and yes, there is a problem through the MACD, that the divergence is heavy, the divergence is heavy in the MACD. Okay, so what happens when there comes this the heavy divergence? So for example, there was this the heavy divergence. Okay, it was struggling to move up because of this heavy there was the bullish trend, bullish movement, heavy bullish movement, but when the divergence, okay, it become heavy, then it struggled to move up, and then eventually on one day it came down heavily, and then there was this the shortfall. Once the divergence, okay, it become normal, and then only we have seen the more bullish movement. This means that the heavy bearish, okay, bearish side divergence in the MACD is not expected to continue for long. And this also means that in the short term, for in next 2 or 3 days, we can see some bullish movement, because this divergence, this heavy divergence, okay, is not allowed. It is not allowed as such. This also means that if this divergence continues, this heavy divergence continues in the MACD, then whatever fall will be there, this fall will be limited and not heavy. This means that 5376 can come into the picture, but there is no guarantee that 5310 will be in the picture. Okay, so I will discuss more of this in the last point of the agenda. Anyways, it is still it is bearish. Stochastic RSI is bearish, everything is bearish. So yes, on this the daily chart, what we have seen is that the S&P 500 is 80% bearish, 80% bearish, whereas on the weekly chart S&P 500 is 80% bullish. So what it means? This means that the long term trend is bullish, short term it is turning bearish. That's it. This is the short term trend, means this was the bullish trend, short term correction, okay, and if it sustains, then the continuation of the bullish trend. That's it, nothing else. Okay, now looking into the Dow Jones is doing much better, okay, as compared to the S&P 500. On the weekly chart, it is absolute 100% bullish, and the surprising part is that it is neither overbought nor saturated. On the daily chart also, if you notice that now there is there's a clear fan out, okay, absolute bullish, okay, and also closing is above the moving averages, bullish, Bollinger Bands bullish, Ichimoku Cloud bullish, everything looks bullish here. Because of this, the fall in 2 or 3 days, okay, intraday reversal, there is a change in the MACD. MACD is bearish, and also stochastic RSI will also be considered as bearish. Okay, so what it means? This means that Dow Jones is not bearish. Dow Jones is not bearish. Dow Jones is bullish in actual, and it is 70% bullish on the daily chart. Okay, it is 100% absolute bullish on the weekly chart. So overall Dow Jones is heavily bullish and is safe. Okay, so that is the best part. Dow Jones is safe because it is neither overbought nor saturated, and still it is absolute bullish. Okay, in the long term it is bullish, and in the short term it is bullish, whereas S&P 500 is, in the long term it is bullish, in the short term, okay, it is under correction. And that is what again and again I mentioned in these my updates to my Patreon community members. And also whatever is going to happen, I will keep you posted through these the daily updates, the daily precise updates of the S&P 500 from Monday through Friday if you are my Patreon community member. And also guys, other than these daily precise updates of the S&P 500, I also give these the stock market opportunities in the premium stocks of the US stock market, mean top 20-30 companies of the US stock market. So guys, if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. You can follow that link in order to join my Patreon community. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, there are these 2 tiers or 2 levels. Other than the geographical location, there is no other difference. So this is the daily S&P 500 updates for non-US and Canada residents. This is the daily S&P 500 updates for US and Canada residents only. So when you subscribe to either of these, then you will be getting daily S&P 500 analysis, updates, probable movement, and the opportunities. And guys, if you notice that many people have joined my Patreon community for last many months or years, and they are getting these daily precise updates of the S&P 500 every day from Monday through Friday, and also the stock market opportunities and the movement, and they know what is expected to happen and why that is expected to happen and how that is expected to happen. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And you can use that link in order to join my Patreon community, and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement of the S&P 500 and in a manner of the Dow Jones, that what is expected to happen in the stock market, in the S&P 500 and the Dow Jones in the next week. So a few important things. Number one, on Tuesday after market hours, Microsoft will post the earnings. Its impact will be seen on Wednesday morning. Wednesday at 2 p.m. Eastern Time, FOMC decision will be released, and at 2:30 p.m. Eastern Time there will be the press conference of the Federal Reserve Chairman. And if you are my Patreon community member, then make sure guys you are available on Wednesday, because I will give you frequent updates so that you can make changes to your trades accordingly. And the third one is Apple. Apple will post the earnings I think in the morning on Thursday, okay, before the open of the stock market. And before I discuss the events in detail, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And also, if you have liked this video so far, then hit like. And also, if you're looking for these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. Now, remember that what we have seen, that the FOMC and Apple, okay, it is always designed in a manner that Apple will release or will post the earnings only the day after the FOMC decision and the press conference. And it is generally in this manner in order to handle the bearishness if there comes a bearishness through the comments of the Federal Reserve Chairman, okay, or through the notes, okay, or through the projections, so that the next day the Apple can handle that, okay, this kind of fall, okay, or any bearishness. And this is generally what we have seen, okay, in last many months. Okay, this also means that on Tuesday, okay, after market hours, Microsoft will post the earnings. And if the earnings of the Microsoft, okay, if the earnings comes as per the expectations of the Wall Street, then Wednesday morning, okay, we can see, or pre-market we can see heavy bullish movement, and this bullish movement will be there, okay, until 2 p.m. Eastern Time, okay, and then from 2:30 p.m. Eastern Time there will be more volatility, there will be the press conference, and by 3:30 p.m. everything will be quite clear. If everything goes supportive, bullish supportive, then the next day Apple posts the earnings, and if the earnings comes in line with the expectations, then heavy bullish movement. If not, in that case, just normal bullish movement. That's it. Okay, now let's talk about the numbers, levels, retrace, okay, upward movement, or this bullish movement, bearish movement. So guys, again, let me remind you that here I'm going to discuss most of the probable movement. But if you have skipped or if you have not yet watched the weekly chart section and the daily chart section, then I will recommend you to watch those two sections, because I've discussed the candles in detail, impact of the candles, okay, and how bullish and bearish they are and what will be the impact. So in a manner, I have covered at least 30-40% of the probable movement, okay, in the weekly and the daily chart section. Now let's talk about the numbers. Numbers 5, 3, 1, 2, 5, 3, 1, 2, and 5, 6, 7, 0. Okay, these are the two numbers. Now, why I am keeping these two numbers in the picture? What is 5670? 5670 was the all-time high of the S&P 500 that was there on July 16. 5312 is the 50% of the fib retracement level. We have seen 5497, 23.6%. We have seen 5396, 38.2%. And the next in the line, okay, it will be 5312, that will be the 50%. Now this 50% will come into the picture, and this will be approximately, if it comes down, 3% fall, approximately 2.75%, but because it is bullish and it is expected to sustain at these levels, so at least you can say from here, or from the trend line level, 3% or 3.5%. Yes, there is a trend line, okay, there is a trend line, there was a trend line, and this trend line will be there. And guys, what is so special about this trend line, okay, that I'm discussing again and again? If you notice, on June 12th there was a bullish breakout, okay, from this trend line, and then and when it happened, it was 5,400, okay, it moved up and struggled, okay, here. And this bullish breakout actually helped the S&P 500 to move up and hit 5670, okay, 202 or 250 points, you can say, okay. That is why this trend line is important, and when it closed below that trend line, first closing, second closing, third closing, okay, back to back closings below the trend line, that is why this trend line is important. And now the moving averages are coming to the trend line, okay, making trend line more special, okay, and more heavy. This means that Monday, because there is as such there is no news, so it is the movement is expected to remain up to that trend line or the moving averages, okay. Tuesday again nothing, so this means that on Monday and Tuesday, okay, we can expect limited bullish movement, because there won't be anything as such, okay, to support this bullish movement or heavy bullish movement as, okay. Now the question is, when will 5670 or 5700 will come into the picture? Now if we calculate, okay, from this level or from the moving averages, okay, it is around 3%, okay, from the trend line or from the moving averages, okay, in general. So this 3% will happen only when there comes a positive news from the Microsoft, or even if there comes no positive news from Microsoft, but the Feds means if the Federal Reserve Chairman, if he goes dovish and everything remains dovish, in that case, number one, what it will do is that it will help the S&P 500 to breach and move above that trend line and the moving averages. So that will be significant in itself. That will be very, very significant, because this is very, very heavy resistance zone created by the moving averages and the trend line. Once it clears, sustains above the trend line, then next comes the Apple. Now next day, if there comes either neutral or good earnings from Apple, in that case, next day will be Thursday. S&P 500 will be able to move up heavily. So either on Thursday or on Friday, in this manner, it will be able to move around or to 5670. And also because of all of this activity, one more thing will happen. And what will that be? That will be the bullish slip in the moving averages, okay, because as of now there is no bearish crossover in the moving averages, okay. But if this kind of event is seen, that it sustains on Monday and Tuesday, on Wednesday it goes bullish, clears the trend line, clears the moving averages, and then on Thursday also it goes bullish. In that case, there will be a bullish slip in the moving averages, and then what will happen? On Friday, we can expect a gap up open, a good gap up open, okay, and a heavy bullish movement to 5670 or even beyond. And then next week, okay, so that will be, I think, August 5th, we can expect one more gap up open, okay, and the continuation of the bullish movement, right? So this is conditional. So this is how this will happen. Now comes 5312. Now 5312, well, it will not just be 5312, but it will be in 52XX zone, okay. Now see, it was coming down, moved up, coming down, moved up, and if it comes down to 5312, move up, and then, okay, so notice this, the range bound. So now you can notice, okay, this is the bearish movement, okay, in this manner, right? For the 5312 to come into the picture, the primary and the sole condition is that S&P 500 should remain below the trend line, should keep on closing below the trend line. Again guys, let me remind you, closing, okay. If you are subscribed to my YouTube channel, or if you are my Patreon community member, then we always talk about the closing. Intraday, what is happening, okay, that will not impact the movement as such, but closing will heavily impact, okay. So as long as it is closing below the trend line, every day this the trend line level will change a little. Okay, so when it so as long as it is trading below the trend line, okay, it remains below the trend line. Okay, 5312 will remain in the picture. For the 5312 to come into the picture, it has to breach the recent low that was 5391. 5391. Okay, but in actual it has to clear 5396. 5396 was the 38.2% fib retracement level, and 5312 is the 50% fib retracement level. Okay, now whenever it will come down, definitely the boundary of the Ichimoku cloud will try to help the S&P 500 to sustain, and at the same time, okay, 5391, 5396 will be in the picture. So we can expect some reluctance in the bearish movement, that it is reluctant to come down. Okay, once it breaches, again the same reason, Microsoft, FOMC and Apple. Okay, only these three. So when it comes down, okay, and if it remains reluctant, and Federal Reserve Chairman, if he goes hawkish, okay, then we can expect the breach of this level. But even without this, the Microsoft, FOMC or the Apple, the S&P 500 will be able to breach, okay, this particular the good support level, because as of now on the lower level charts it is trading bearish. Okay, so so in a manner it doesn't need any excuse, or it doesn't need any reason to breach. Okay, this means that for 1 day or 1 or 2 days it can try to sustain, otherwise, okay, it will breach with or without these. Okay, but yes, with the support from the Federal Reserve Chairman, if he goes hawkish, okay, then there will be very heavy fall, and I think within 1 day, S&P 500, 1 or 2 days, it can come down and hit 5312. Okay, so when it come down to hit 5312, then it will be Thursday. Okay, Wednesday or Thursday. By Thursday it can hit 5312, and then Apple posts the earnings, and if Apple posts neutral or bad earnings, in that case what will happen? Again there will be the continuation of the bearish movement, and in that case it will come down further, and then in the 52xx, okay, there is a very heavy support level. But if the S&P 500 comes down and hits 5312 by Wednesday itself, okay, in that case for a day, means for Thursday, it can try to get some support here, okay, at this the support zone, and then on the next day, means Friday, it will come down to hit the boundary of the Ichimoku cloud. But even though it will be coming down to hit the boundary, then also it will be under technical compulsion to regain this the zone. Okay, this is very much clear, right? So in short, it is actually the trend line of the S&P 500 itself, including the moving averages. Okay, so what will be the role of the Dow Jones here? The role of the Dow Jones will be that, remember, as of now on the weekly chart, Dow Jones is absolute bullish, 100% bullish, but that does not mean that Dow Jones will keep on moving up, up and up. This simply now confirms that even if the Dow Jones comes down, then also there will be a limited fall and it will recover and it will move up. This is the meaning of the absolute bullish trend, that irrespective of anything, bullish or bearish, it will go it will go bullish. Okay, so that is the true meaning of the bullish trend. So this means that if this happens, this kind of movement happens in the S&P 500, then at the same time, okay, the same will be seen in the Dow Jones, but Dow Jones will not give up heavily. Now there is a problem in the Dow Jones, and that problem basically is that trend line in the Dow Jones. Because what we have seen, that it was sustaining for 1, 2, 3 days, then it came down, given first closing below the trend line, second closing below the trend line, okay, then everything, okay, it was bearish. But because S&P 500 came into the condition wherein, okay, it was a little stressed, okay, on the lower level chart, oversold, and those are conditions, S&P 500 moved up, and everything like this bad PCE or the core PCE data, it was already considered, okay, even before this thing happened. So that is why we have seen this bullish movement. This means that if there comes a closing below this trend line on Monday, then we cannot trust any bullish movement. Although still we cannot trust any bullish movement, because There were 2 consecutive closing below the trend line, then there is 1 closing above the trend line. So still we cannot trust this a bullish movement. Okay, until and unless there comes 2 or 3 closings continuously above the trend line. Okay, but if on Monday there comes a closing below the trend line, in that case, okay, there will be very few chances of seeing the bullish movement. Okay, it will come down. But this bearish movement in the Dow Jones does not mean that the market is that the Dow Jones is going bearish. No, on the weekly chart it will remain absolute bullish. Okay, means even if it comes down, then also it will recover. But when it comes down and recover, this does not guarantee that S&P 500 will come down and the S&P 500 will also recover. No. And even if the S&P 500 comes down, S&P 500 will come down heavily as compared to the Dow Jones, and the recovery in the S&P 500 will be very limited as compared to the Dow Jones. Right? And if there comes 2 consecutive closings again below the trend line, then this means that S&P 500 most likely, okay, although it will be clear by Thursday morning itself, but in this case it will be very much clear that as S&P 500 most likely is going to enter into the bearish trend. So there will be the trend change, the short term trend change. Long term it will remain bullish. Okay, short term it will turn bearish. In that case there will be more bearish movement. Okay, it will be there, right? And guys, one more thing I forgot to tell you, and that was this the 5376 level. So what actually is this 5376? This 5376 is the gap. Okay, in the stock market there is a theory, okay, that there is a level, this is the 5376, and the theory says that whenever there comes a gap or whenever a gap is seen, if you notice the same thing, okay, there was a gap, right? On June 12th, because of this bullish breakout, a gap was created, okay, and the closing of this candle was 5376 approx, 5376. And the gap fill theory says that whenever there comes a gap, although it has no technical relevance, okay, but it happens 95% of the times, and it says that whenever there comes a gap, then this gap must be filled or should be filled. Okay, and we have seen 5391 was there, but and then there was this a bullish reversal. This means that a struggle here, okay, or any more bearish movement, and when I say that it will come down and find heavy support at this the Ichimoku cloud, then also it will enter into the Ichimoku cloud to fill the gap, and the gap will be filled. 5312 may or may not be seen on the same day, okay, or on the next day, okay, or it may not come into the picture if Apple posts, okay, good earnings, or if the Federal Reserve Chairman goes dovish, okay. But no matter what, 5376 will be there in the picture. Okay, and remember 4818. What is this 4818? Okay, it was the all-time high level of the S&P 500, okay, earlier, and the S&P 500 has not fulfilled its technical obligation to 4818. Okay, so there was no gap as such, but it was a technical obligation, just whereas this gap thing, okay, it is a non-technical thing, right? So 5376, this means that as of now any fall, this was 23.6%, this is 38.2%, and any fall will be seen at least up to 5376, and then only 5312 will come into the picture. But whatever will happen or whatever is going to happen, I will keep you posted through these daily precise updates of the S&P 500 and the Dow Jones every day from Monday through Friday. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community in order to get these daily precise updates of the S&P 500 every day from Monday through Friday. So guys, hit like if you like this video, and subscribe to my YouTube channel if you have not yet subscribed. And if you have any questions that you want to ask, then please feel free to ask your question through the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of July 29th, means from July 29th, which is Monday, to August 2nd, that will be Friday.